Hi, everyone. Welcome to Managerial Accounting Cengage Text, Chapter 2. So this is talking about job order costing. This slide just talks about some of the things we're going to cover, some objectives we're going to cover in this chapter. First of all, companies have and need cost systems. These systems help to measure, record, and report the product costs associated with a particular job or event. Job order costing provides product costs for each quantity of product that gets manufactured. So each quantity of a product that is manufactured is called a job. And this costing is often used by companies that manufacture real specific products for customers, or it could be batches of similar products. Apparel manufacturers, guitar manufacturers, airplane manufacturers. Now, process costing provides information about product costs for each manufacturing department or process. This is oftentimes used by companies that use process costing such as oil refineries, paper producers, chemical processors, and food processors. The hybrid costing, which can also be called operations costing, has a little bit of mix of both the job order and the process costing. This is often used in a manufacturing process that involves the continuous production of identical units, but then it's followed by specialized processes where units or batches of units are manufactured into products that then are unique from one another. This provides you with an example of Legends guitar manufacturing. Here you see the direct materials that go into building the guitar. And you see while the guitar is being built in work in process, you've got direct labor attached to this. And what this slide's trying to show you that there's now a new term we're calling prime cost, which are direct materials and direct labor. Conversion costs consist of direct labor and factory overhead. We also know factory overhead is a part of the cost of the product, but since we can't trace it, we usually assign a predetermined rate. Factory overhead in this scenario, the depreciation, the glue, the sandpaper, the utilities, the supervisor's salaries, the insurance on the building, all these things that have a definite cost but aren't necessarily attributed to just the guitar. Then as you see, once the guitar is completed, it will then go into the finished goods inventory. So you're seeing the breakdown of the various inventories. We've got direct materials. You see the work in process that the direct labor flows right into. And then you also see finished goods. So job order costing records and summarizes manufacturing costs by jobs. While they're still in production, they go into work in process inventory. And then once they're completed, they become part of the finished goods inventory. Then when the finished goods are sold to customers, then it goes out of the finished goods and goes into cost of goods sold. So basically you're seeing how the flow of the costing occurs. Now in job order costing, perpetual inventory, controlling accounts, and subsidiary ledgers are maintained for the materials, for work in process, and also for the finished goods inventory. The materials account in the general ledger is a controlling account. A separate account for each type of material is maintained in subsidiary material ledgers. This exhibit shows Legend guitars, the materials ledger account for maple. Debits, which increase the account, and credits decrease the account, are shown here. Increases are based on receiving reports, such as receiving report number 196 for $10,500, and that's supported by the supplier's invoice. Decreases or credits are based on material requisitions, such as the requisition number 672 for $2,000 worth of material for job 71, and requisition number 704 for $11,000 for job 72. So just to recap, as we purchase products, they go into the materials inventory. When we are creating a job and we request materials for a specific job, they then leave this department and go into work in process. Now, sometimes if it's indirect materials, they would go into a factory overhead. A receiving report gets prepared when materials that have been ordered are received and inspected. They check the quantity and the condition of the materials, and that gets entered on the receiving report. And then when the supplier's invoice is received, it gets compared to the receiving report just to make sure there aren't any discrepancies. Once, if there are no discrepancies, then we record a journal entry to show the purchase. As you see here, we would debit the materials and we would credit the accounts payable. Now, most companies use computerized information processes to record the use of materials. And in those cases, storeroom employees electronically record the release of materials, which then automatically updates the material ledger and the job cost sheets. Here you see an example of how the labor is prepared on time tickets and how each time ticket tracks the jobs that are worked. When employees report to work, they use electronic badges or sometimes use time cards or cards to clock in. When employees work on a specific job, they use these time tickets so they can record the amount of time they've worked on that specific job, so that time can get recorded to that job. Then a summary of the time tickets is used to report the journal entry showing the direct labor for the month. So for factory overhead, this is going to include a lot of different things. It's going to include everything in the factory except direct materials and direct labor. So indirect materials are any materials needed to make the product, but that aren't specifically associated directly to the product. Indirect labor can come from salaries of supervisors and the wages of other employees, such as the janitor or the cafeteria staff. Indirect labor is any labor that's needed to make a product but isn't specifically traced to that product. Utility bills, depreciation, all of those items specifically for the factory are put into the factory overhead. So let's just look at this one. For manufacture, which of the following would be considered an indirect material? What do you think, guys? Now, the fabric used to make sofas, that's direct. You can specifically apply that fabric to a specific sofa. But the glue used to bind books, that's indirect. They're needed to make the product, but you really can't trace it to that product, okay? Now, the journal entry that will be used to record the factory overhead, we debit the factory overhead, so that increases, and we credit those indirect materials that are requisitioned, or wages payable, utilities payable, accumulated depreciation. All of those get put right into the factory overhead. Factory overhead, again, is a big lump of a variety of costs, and it's very different from direct labor and direct materials because it's indirectly linked to the jobs. It cannot be identified or traced to a specific job. So the process by which this factory overhead gets assigned to a cost object, such as a job, we call it a cost allocation. We allocate the factory overhead costs to jobs to come up with, we try to come up with some type of measure that we can link that's related to a specific job. And we usually use an allocation or an activity base, which we call an allocation base, where we're either using machine hours or labor hours that allow us to specifically assign this extra factory overhead to jobs. So what we try to do is come up with some type of predetermined overhead rate. This predetermined overhead rate is computed by just using estimated amounts at the beginning of the period. We've got to come up with a way to assign this factory overhead to jobs, but we don't know the real amounts until at the end of the period. But then it's too late because we need to provide cost for each of these products. So what we try to do is estimate them as best we can. And then at the end of the period, we may have underapplied our factory overhead. So what we estimated to what actually happened and what we applied to the jobs, we could be over or we could be under, but we do allocate that and adjust it at the end of the period. So in this case, let's assume that Legend Guitars estimates the total factory overhead cost at $50,000 for the year. And we're basing how we're going to allocate that is by looking at the direct labor hours. So if we know we're going to have about 10,000 direct labor hours during the year, we're going to assign that factory overhead based on how many hours the employees work on a specific job. So the predetermined overhead rate gets computed by the 50,000 in what we estimate the cost to be divided by our direct labor hours, which, as you see, means $5 per direct labor hour will be assigned to factory overhead. Some companies use something called activity-based costing that we'll talk about in another chapter. But this is, in a simple way, how we try to come up with a formula in order to assign that cost. So the factory overhead applied to each job get shown on the cost records here. Cost job sheets. So as you see here, each cost job sheet has clearly the direct materials that were brought in on the job, the direct labor from the timesheets, and then we assign the factory overhead based on our predetermined rate. Okay? So the factory overhead account for Legend Guitars illustrates both underapplied and overapplied factory overhead. Specifically, the December 1st, 2028 credit balance of $200 represents overapplied factory overhead. But the December 31st, 2028 debit balance of $150 represents how we underapplied factory overhead. Factory overhead gets increased for the actual overhead cost incurred. Factory overhead gets decreased or credited for the applied overhead, that amount that we applied to the jobs. Depending on whether actual overhead is greater or less than the applied overhead, then the factory overhead is either going to have a debit balance or a credit balance. You see here, when it's underapplied, it has a debit balance. The actual costs were greater than what we applied. If we've overapplied to jobs, we would have a credit balance. Okay? Now, the debit balance is called underapplied factory overhead or underabsorbed factory overhead. And if it's more than the actual overhead that was incurred, then the credit balance is what we call overapplied factory overhead or overabsorbed factory overhead. During the year, this balance in this account gets carried forward and is reported as either a deferred debit or credit on the monthly interim balance sheets for the company. And then any balance in the factory overhead account shouldn't be carried over to the next year since its operations involved this year. So we need to match our costs with the revenues that were produced. So if the balance of factory overhead at the end of the year is small, it just gets written off into cost of goods sold. So here, as you see, with the Legend Guitars, if the factory overhead is underapplied, then we would have to increase our cost of goods sold. So we adjust that. If the factory overhead was overapplied, then that would reduce our cost of goods sold at the end of the year. Here we're looking at the job cost sheets and the controlling work in process account. Here you see in the work in process all the various jobs specifically in the subsidiary that relate to the jobs that are in process at the time. So during the period, the work in process gets increased when direct materials are being used for the product, the jobs, direct labor costs, and the applied factory overhead. During December, job 71 was finished and the product costs, direct materials, direct labor, and the factory overhead get totaled. This total is divided by the number of units produced so we can come up with a cost per unit. So here are the 20 jazz guitars produced as job 71, ended up costing $512.50 per guitar because the total cost was $10,250 and they made 20 guitars. Once the job is completed, it gets transferred out of work in process into the finished goods account. Now this Exhibit 8 finished goods ledger is shown here. In job order costing, the preparation of a statement of cost of goods manufactured isn't really necessary. It's because the job order costing uses a continual inventory system we call perpetual. So the cost of goods sold can be directly determined from the finished goods ledger. Now, during December, Legend Guitars sold 40 of the Jazz series. They sold them for $850, generating sales of $34,000. But the cost per guitar sold was $500, or about $20,000. So we show the journal entry to report the sale, but then at the same time, we need to report the journal entry to remove the goods from finished goods and put them into cost of goods sold. Period costs are not related to the product. Period costs are those items that are cost in generating revenue, but they aren't involved in the manufacturing process. Selling expenses for marketing and delivering the sold product to customers are period cost. Administrative expenses to help manage the company are period costs. During December, Legend Guitars recorded the following selling and administrative costs. Those costs are put directly on the income statement. The only costs that are product cost are those involved in the factory with making the products that we will sell. This chart shows the cost flows through the manufacturing accounts of Legend Guitars for December. The summary details of the following subsidiary ledgers are shown. You see the material ledger, you see the job cost sheets, and you see the finished goods ledger. This Exhibit 10 shows the income statement of the Legend Guitars. Let's see if this makes sense. So Livingstone Industries, a manufacturer of fine dishware, uses machine hours to calculate its predetermined overhead rate. For the next year, its direct labor hours are estimated to be 24,000, and its machine hours are estimated to be 72,000. The estimated total factory overhead will be $1,260,000. What is the predetermined overhead rate? So it's telling you that they don't use direct labor hours. They use machine hours to calculate this predetermined overhead rate. So the machine hours of 72,000 is what will be used. So as you can see here, we take the $1,260,000 of estimated factory overhead and we divide it by the 72,000 of machine hours to come up with $17.50 per machine hour for the assigned factory overhead. So let's look at some problems here that hopefully will help you understand this material. Here we see in T account form 5 transactions. Now these transactions are indicated by letters. Our job is to describe each of these transactions. So the first one you see, there's a debit to work in process, where we see an A, and there's a credit to materials. What is that? Well, you can see materials were requisitioned, so they were removed from the raw materials section, and they began using them for a job. So you see that's a debit to work in process, a credit to materials, direct materials requisitioned for use. Here you've got a B to factory overhead as a debit and a credit to materials. So we know materials can be direct materials or indirect materials. In this case, because they're increasing factory overhead, we know they're indirect materials. We debited work in process, we credited factory overhead, which shows indirect materials were requisitioned for use. Next, we see a debit. C is a debit to work in process, and we see a credit to wages payable. So debit to work in process, credit to wages payable, that means direct labor was used. With this D, we have a debit to factory overhead and a credit to wages payable. Because it went into factory overhead, not work in process, factory overhead. Because it went into factory overhead, that means to me that it was indirect labor. Because direct labor is used specifically on the job, into the product. Here with E, we have a debit to work in process and a credit to factory overhead. Do you see that's where we're applying the factory overhead straight to the job? Then F, we have a debit to finished goods and a credit to work in process, which basically means the job's been completed, it's being removed from work in process and going into finished goods. The job was done. Then you see here we have a debit to cost of goods sold and a credit to finished goods. Well, that shows me the product was sold, the goods were sold. Here is another exercise. We have information from a company, a manufacturer of fabricating equipment. We're going to determine what is the cost of goods sold, what are the direct material costs and the direct labor costs based on this information. So cost of goods sold, if we look at our sales and we look at our gross profit, isn't generally sales minus cost of goods sold gross profit? So if we have sales and we have gross profit, then we can come in and determine our cost of goods sold. The $13,150,000 less the gross profit would be cost of goods sold of $7,150,000. Next, and in order to determine our direct material cost, we have to start with our materials purchased, and then we subtract the indirect material inventory and the material inventory to see what specifically went into our direct material cost. Then for direct labor cost, we're going to look at our manufacturing cost for the period of $8,110,000. We know our total manufacturing cost is going to equal direct materials, direct labor, and factory overhead. So if we know our direct material costs and we know what our factory overhead is, then we can compute what our direct labor cost is. Okay? Here we have Kingsford Furnishing Company, manufactures designer furniture. Kingsford uses job order costing, and on April 1st, here are the balances from the material ledger, where we have fabric of $58,300, polyester filling of $30,000, lumber of $58,800, and glue of $99.50. Then during April, we purchased fabric of $820,000, polyester filling of $315,000, lumber of $555,000, and glue of $80,000. We see in this blue section table the materials that were requisitioned to various jobs. So you see jobs 601, 602, and 603, and the fabric, the polyester filling, and the lumber. Now it's telling us glue is not a significant cost, so that will go into factory overhead. Our job is to journalize entries that recorded the purchases of materials in April. Then we'll journalize the entries to record the requisition of the materials. And then we'll figure out what the April 30th balances should be in the inventory materials account. So here, to show the purchase of the materials, again, we have the fabric of $820,000, the polyester filling of $315,000, lumber of $555,000, glue of $80,000. We would debit our materials and credit our accounts payable. Then, as we requisition materials, we would show the items that we requisitioned, the $374,000 from job 601, the $736,400 from job 602, and the $552,900 from job 603. That will all go directly into work in process, the $1,664,000, because those were directly associated with products, with jobs. The glue will go into factory overhead. So we will show a debit to factory overhead, and we credit the entire amount, the $1,747,600 materials. At the end of the period, we need to know our balances in the materials account. We have to start with what we began. So fabric began the month with $58,300. We had purchases of $820,000. We requisitioned $810,000. So therefore, we end up with a balance of $68,300. We do that with each one of these. The polyester filling, we started with $30,000. We purchased $315,000, and we requisitioned $320,000. Same with lumber. We began $58,800. We acquired $555,000 during the month, and we requisitioned 2 jobs, $534,000, to give us an ending balance of $79,800. And then lastly, with glue, we started at $9,950. We purchased glue of $80,000, and we requisitioned $83,600 to end up with $6,350 with glue. Here, Shoemaker Industries manufactures recreational vehicles. Shoemaker uses job order costing, and here are some time tickets. So these time tickets show the costs associated, the labor costs associated with jobs. Then it also shows some factory supervision, which we know would go into factory overhead because it wasn't specifically linked to a job. Then it tells us factory overhead is applied to jobs on the basis of a predetermined overhead rate of $23 per direct labor hour, and the direct labor hour is $29 per hour. So we need to journalize the entry to record the factory costs, and then journalize to apply the factory overhead to the jobs for June. So here we would total all the job labors for $47,792. The factory supervision we would debit to factory overhead for $12,500, and we would credit wages payable for the full amount of $60,292. For the work in process, we know we had $47,792 in the labor, direct labor. If it was $29 per hour, then that means in the month there were 16,648 direct labor hours. Since we're assigning it based on direct labor hours, we have to calculate the number of hours, and we assign it at $23 per hour in order to then allocate the factory overhead to the work in process. So we debit our work in process of $37,904. Whoops, sorry. And we credit our factory overhead of $37,904. Remember, debits to factory overhead are actual costs. Credits to factory overhead are those amounts we apply to jobs. Here, Eclipse Solar Company operates 2 factories. The company applies factory overhead to jobs on the basis of machine hours in Factory 1 and on the basis of direct labor hours in Factory 2. Estimated factory overhead costs, direct labor costs, direct labor hours and machine hours are shown over here between Factory 1 and Factory 2. Now, I'm sorry you can't see that very well, but the actual factory overhead costs for August for Factory 1, that's $1,515,800 and $3,606,300. It looks like, 6063. Let me just move this over a little. Okay, sorry about that. You can see it better. And then here are the actual direct labor hours for August. They're 64,500. So we need to figure out the factory overhead rates for Factory 1 and 2, and then journalize to apply it, and then figure out what our balances are. So here, for Factory 1, we've got $18,500,000 estimated cost, with our estimated machine hours to be 1,250,000 hours. So if we divide the estimated cost by the estimated machine hours, we would have a predetermined rate of $14.80 per machine hour for Factory 1. For Factory 2, I'm just going to move this over so you guys can see it. I'm so sorry. there. For factory 2, we're applying this based on direct labor hours. So we look at the overhead costs estimated of $44 million divided by our estimated labor hours of 800,000. So we would come up with $55 per of applying the factory overhead. Now to journalize this, we would debit the work in process for $1,554,000 and credit our factory overhead. But remember, whenever we apply it, we credit it. So again, with this predetermined rate of $14.80, this is times the direct labor hours for the month. So if we know the direct labor hours, we are then able to, this one is direct machine hours. We are able to assign that to, assign the factory overhead. And then here, as far as factory 2, this is the direct labor hours. And so we take our cost of $55 times our $64,500 in direct labor hours. We debit the work in process to apply it, and we always credit factory overhead. Now, we're supposed to determine the balances as of the end of August, if we over-applied or under-applied. So you can see what we estimated was $1,554,000. What we actually had from factory 1 is $1,515,800. So in this case, we over-applied. We have a credit balance sitting in our factory overhead account, which means we over-applied 2 jobs, the factory overhead. The actual costs came in less. But for factory 2, our actual costs were $3,606,300, and we applied $3,547,500. So in this case, we under-applied our factory overhead. What we gave to the jobs was actually less than what our actual factory overhead was for August. Now, with exercise 210, Turbo Shop uses job order costing to determine the cost of performing engine repair work. Estimated costs and expenses for the coming period are shown, and the average shop direct rate is $40 per hour. We're supposed to determine the predetermined shop overhead rate per direct labor hour. Okay, so here we can see that the overhead rate per direct labor hour of $40. We want to show for factory overhead the actual cost of the shop and repair equipment of $64,220. The depreciation that would go into factory overhead. The shop supervisor's salaries would also go into overhead along with the property taxes, the shop supply. So our actual shop overhead costs here are $346,110. The engine parts and the shop labor are directly associated to the jobs. So they're not part of the shop overhead rate. The advertising and admin we know are going to be period costs. So they aren't a part of product costs. They are on the income statement each period. The estimated activity base is going to be our shop direct labor, which is the $1,992. But we have to figure out the number of hours. So if we divide that by $40 per hour, we'll come up with 49,800 hours. So our $1,992 divided by that $40 per hour, we've got 49,800 hours. That 346,110 divided by our 49,800 hours is going to be $6.95 per direct labor hour is what we're estimating. And guys, I'm sorry, I said these were actual costs. It says up here, they were estimated costs and expenses because we don't know the actual cost. So this is how you come up with the predetermined rate. The key to this exercise is you need to know what goes in the factory overhead. The direct labor and the direct materials do not. And also the selling and admin are period costs, so they aren't a part of this either. Okay, so I'm just trying to... So this particular exercise, Collegiate Publishing began printing operations on March 1st. Jobs 301 and 302 were completed during the month, and all costs applicable to them were recorded on the related cost sheets. Jobs 303 and 304 are still in process at the end of the month, and all applicable costs except factory overhead have been recorded on the related cost sheets. In addition to the materials and labor charged directly to the jobs, $4,500 of indirect materials and $8,200 of indirect labor were used during the month. The cost sheets for the 4 jobs entering production during the month are as follows. So we are going to journalize these transactions. So for the journal for materials, we're going to look at each job. The direct materials for job 301, 12,500. Job 302, 18,750. 9940 for job 303, and 304 was 14,310. We total those, put them as a debit to work in process. We have a debit to factory overhead because it told us requisitioned was $4,500 of indirect materials, and then we credit materials. For the labor, we have specifically the direct labor for each job. We also know that indirect labor was $8,200 up here. So we will debit to work in process those direct labor costs assigned per job. We will debit to factory overhead the indirect labor of $8,200, and we credit the wages payable. Now, in terms of the factory overhead, we can tell that this factory overhead is shown here for job 301 and 302. We can tell the way they calculate the factory overhead is based on 25% of direct labor costs. You see, we have the 7,750 divided by 31,000, which is 25%. Or if you look here, the 10,550 divided by the 42.2 is 25%. So we can calculate the predetermined overhead rate based on the 25%. So if we take our labor, direct labor times the 25%, what we will debit to work in process is $26,700, and we credit our factory overhead. Because I just wanted to show all the direct labor costs here total the 1068. So we know 25% is what they're using. So to take all the direct labor times 25% is what we would allocate for factory overhead. Then once they have been completed, we debit the finished goods and we credit the work in process. So job 301 and 302 both were completed. So we're going to total that amount, debit it to finished goods, credit the work in process. Here we've got various information that we need to prepare an income statement for. So this is exercise 214. The following events took place for Rockhaven Biking during February. The first month of operations as a producer of road bikes. We have to prepare an income statement and figure out the inventory balances at the end of the month. So we know we purchased $450,000 of materials. We used $423,200 of direct materials into production. We see what we incurred in wages. It tells us what the factory overhead was applied for. It tells us we transferred $565,000 of work in process to finished goods, and we sold goods with a cost of $520,000. So that shows us our cost of goods sold, our revenues of $935,000 for selling bikes, and then they give us the selling expenses and admin. So in order to do an income statement, we need our revenues, we need our cost of goods sold. So all this information regarding materials is going to be very helpful for our ending inventory. But what we really need is our cost of goods sold for our income statement. Our revenues less our cost of goods sold give us our gross margin. And then our period cost of selling expenses and admin expenses show our net income. Now, in order to calculate the materials, we start with what we purchased. This is the first month, so we didn't have any on hand. We purchased $450,000. We used or requisitioned $423,200. So what we have ending in the materials inventory is $26,800. We used in production $423,200. We can add our labor. We add what we applied to factory overhead. So we have a total manufacturing cost. We know what we transferred out to finished goods. So $23,300 is sitting in work in process at the end of the month. So our finished goods we know is $565, but since we transferred out to cost of goods sold $520,000. We know what is in finished goods of $45,000. So now we're going to look at the objective 3 here. Job order costing can also be used in the service industry. A service business can use job order costing. Even though it's a service, there's still specific costs that can be applied directly to a customer. Examples of this would include attorneys, hospitals, advertising agencies, event planners, car repair shops. The primary product costs for a service business are pretty much direct labor and some overhead. Any materials or supplies are pretty insignificant, so they usually just get put into the overhead. Like manufacturing, the direct labor and overhead cost of rendering services to clients get added to a work in process account. When a job's completed and the client's billed, it gets transferred to a cost of services account. So that cost of services is very similar to what we call the cost of goods sold for a manufacturing or a merchandising business. A finished goods account aren't necessary here because the job's been completed. So we're not selling products. The cost of services is utilized because once the services get recorded upon completion, we're done. Product costs in a manufacturing company are recorded and reported on the balance sheet as inventory. The cost of the manufactured product sold is reported on the income statement as cost of goods sold. But in a service company, product costs typically aren't reported as inventory because the cost of the service happens in the same period of when the service is sold. Here we've got the primary product costs for a service business include not direct materials or direct labor, and overhead costs are really the primary products costs for service industries. Okay, we're going to look at a couple more exercises. Here, this one is the costing for a service company. The law firm of Prawit and Bradford accumulates costs associated with individual cases using job order costing. And here are all the transactions that occurred in August. So we're going to journalize them. On August 3rd, we charged 160 hours of professional lawyer time to the Shadow Creek breach of contract suit to prepare for the trial at a rate of $200 per hour. Here we'd put into work in process $32,000 and credit our salaries payable of $32,000. Again, that's 160 hours at $200 an hour. We reimbursed travel costs to employees for depositions related to the Shadow Creek case, $13,000. So we would debit our work in process and credit our cash. Here we charged 260 hours of professional time for the Shadow Creek trial at a rate of $185 an hour. Again, work in process of $48,100, and we credit our salaries payable. We received an invoice from consultants for $40,000 for expert testimony related to this trial. We debit our work in process and credit our consultant fee payable. Here on August 27th, we applied office overhead at a rate of $70 per professional hour charged to the Shadow Creek case. So we looked back on what was charged, and it was 420 hours at $70 per hour, which gives us a debit to work in process for $29,400 and a credit to office overhead for $29,400. We paid administrative and support salaries. Those go into office overhead. They don't go directly related to work in process since they're indirect labor costs. Used office supplies for the month, that also goes into the overhead. We paid professional salaries. So we they were already, once they were charged, we put them into the work in process. Now we're just paying the salaries. We debit our salaries payable and we credit the cash. We billed Shadow Creek $180,900 for successful defense of the case. Here we've got the accounts receivable for $180,900, and we credited fees earned for $180,900. Now, also as we do this, all those costs that were enveloped in work in process, we now need to remove them and put them into cost of services. So the previous slides, we show all of these totals: $32,000, the $13,000, $48,100, $40,000, and $29,400. This does not include the indirect labor or the supplies. This is just that went specifically for the Shadow Creek case. So we debit our cost of services, which is kind of similar to our cost of goods sold, and we credit our work in process. Okay. Here, how much overhead was overapplied or underapplied? We applied overhead of $29,400, but the actual overhead that was incurred was the paid administrative and support staff of $34,800 and the office supplies. So we actually had actual costs of $38,300, but we applied $29,400. So we underapplied our overhead of $3,900. So what was the gross profit on this case? Well, if they earned $180,900, and we showed the cost of services of $162,500, but we need to add the underapplied overhead. So technically, they made $9,500 on this job. Next, we have Objective 4. Job order costing accumulates and records product costs by jobs, and ultimately, over time, they can be compared to similar jobs and know roughly what the costs are going to be. This can be used by managers for trying to control costs. Legend Guitars use direct materials in jobs 54 and 63. Both jobs produce the same type and number of guitars, so the direct material cost per unit should be the same. But the material cost per guitar for job 54 is $100, while for job 63 it's $125. So the material costs are definitely more in job 63. So here, this shows how you can compare job sheets, job cost sheets. They both had 40 Jazz Series guitars, but you can see that with job 63, they used $1,000 more in wood. There could be all kinds of reasons for this. It could have been poor quality wood. I mean, those are things that managers can determine. Was it an unskilled laborer? Was it wood that wasn't up to standards? There could be reasons related to that. The job cost sheets can be looked for reasons. Legend Guitar should conduct an investigation and determine the cause of the extra 100 board feet used for the job. Cutting tools needed repair. That's another good one. Or the instructions might not have been perfect for the job. So guys, this covers it for Chapter 2. I hope you have a great week.